My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. Call me, 1-800-743-CNBC. Tweet me, @Jim Cramer. When the book is written on this economy right now, it's going to come down to something that is pretty pedestrian. It's going to come down to chips. The chips in this bag and the chips on this rack. Now, I know it sounds like a gimmick. Maybe it is. But if you understand the zeitgeist of this market, if you really want to get it, these two types of chips tell you a great deal of the drama going on in the stock market and in the entire country. So on a good day, where the Dow advanced 130 points, S&P gained 1.03%, NASDAQ jumped 1.51%. Allow me to explain. Let's start with these chips, the semiconductors, okay? Right now, there's a veritable feeding frenzy for the chip makers. Investors can't eat just one. The SMH, the chief semiconductor ETF, is just going crazy. Buyers are chowing down on this stuff like piranhas in the Amazon basin. The darn SMH is up nearly 34% year-to-date and more than 180% from its lows in the big bottom, October of 2022. Meanwhile, NVIDIA, obviously the undisputed leader of the group, is up 87% year-to-date and 757 from its lows just 17 months ago. 757%, people. On the other hand, though, this bag of chips is under assault. The price of a bag of potato chips has risen 45%, while the cost of producing them has increased by about 40% over the last few years. But unlike semiconductors, potato chips haven't gotten any better over that period. Same product, much higher price. The first, NVIDIA, has gone up so much that if you owned its stock, you wouldn't know the difference between the cost of this bag of generic chips and some name brand Lays. These prices would mean nothing to you. That's the beauty of investing well. But for most Americans, they can't invest well because the cost is everything. Food costs are at the heart of the dilemma facing Americans. You have to eat, and eating's a lot more expensive than it used to be. The pandemic led to a level of price increases that we hadn't seen in decades. Back in 2019, here's a good example. A basket of food costs $156. Now it's $210. Most Americans don't have enough spare money to buy a share of NVIDIA, for heaven's sake. 36% of Americans have more credit card debt than emergency savings. Another 19% have less than $1,000 in savings altogether. Putting it all together, only 45% of Americans have more than $1,000 in savings. Well, it's not much left after you buy an NVIDIA piece of stock, is it? Let alone a chip. We'll get into that in a second. What they make goes to shelter, which is They make goes to gasoline. Fortunately, it's not that big, but apparel, which is holding in. Food, though, is disastrous. And if you're eating store-brand potato chips, you probably can't invest in microchips. But for the haves, what can I say? I've been investing for 45 years, and it's difficult for me to find an analog that can even rival this moment. Sure, there were periods when Texas Instruments led this market, in the 80s. There were long stretches when you had to own Intel in the 90s because it was unstoppable. In the interim, there might have been a chip that could ignite an AMD or a Monolithic Memories or the old National Semi, but nothing like NVIDIA. Maybe the personal computer revolution comes close, but not of late. See, the contrast between the haves and the have-nots, I find, is disconcerting, and I hope you do too. The cost of food is sapping the average consumer, and it seems like no one has the ability to do anything about it. Yes, Costco reported tonight, and the fantastic retailers trying to hold the line on pricing using their signature Kirkland brand. It's working, at least if you're a club member. Now, the stock is off after hours, but there's nothing really significant to explain that other than the fact that what we call came too hot into the print or the quarterly results. Remember, they report every month, so there's no surprise by the last month. Now, Kroger, though, reported this morning, and this supermarket stock led the S&P 500 because they've been cutting prices, where they've been introducing their own private label brands. They're going to do 800 new private label brands this year. That's how you keep costs down. Meanwhile, endless versions of personalization, digitizations are causing sales to go up while bolstering their margins. Walmart's actively keeping tabs on its suppliers and wants to keep prices the same. But try as the great retailers are doing, and they are trying. They can't get prices back to pre-pandemic levels. It's just not working. Now, the presidency may hang in the balance of this bag of chips and food that surrounds them in the grocery aisles. Even though we've got low unemployment, voters really, really hate inflation. Well, in this group of chips, the ones that are so abstruse and cut your hands if you're not careful, these guys, well, let me tell you something. These are what we call chips for the enterprise. Right now, the enterprise, which are corporations, is the place to be. Thanks to higher interest rates, the end of additional food stamp aid, and the resumption of student loan payments, the consumer's totally strapped. They really are. Mood is grim at the register. But the enterprise, whole different story. Consider the semiconductor aisle. These chips are incredibly expensive, but they deliver businesses such a big return on investment that it makes them addictive. Now, on Instagram recently, Mark Zuckerberg let you know that he can't just eat one. He said Meta will have 350,000 super high-end NVIDIA H100 graphics processing units and the computing power equivalent of 600,000 of them by the end of the year. A single H100 chip costs over $40,000. Most Americans need to be careful about how many potato chips they could afford, or they wouldn't be buying these knockoffs, right? Now, the ironic comparisons don't really stop there. I mean, no, it's a little bit of a dramatic license I want to take, but what's really driving the demand for the NVIDIA H100s? Generative artificial intelligence, machines that think and accelerated computing, which allows these thinking machines to work at lightning speed. We didn't know all that much about these twin concepts until the orders started flowing into NVIDIA. Right about the same time that many discovered the wonder that was Chat GPT. That's driving the prices up. But how about potato chips? The only thing that can drive these chips down in price, other than the furious attempts to hold the line by Costco, Walmart, and Kroger, the new class of weight loss drugs known as GLP, GLP-1, GPT, GLP. And GLP-1s are made by Novo Nordisk and Eli Lilly. If you can afford these drugs or get your insurance to pay for them, then you really can stop at just one potato chip, if you need them at all. Go right by that aisle. Not interested. You need to think of the GLP-1s as willpower enhancers with a secret weapon. They make really great, tasty things, kind of taste blah. Yesterday, Brown-Forman's Jack Daniels had real bad numbers. Like every other company challenged by GLP-1s, Brown-Forman claims the new class of drugs isn't doing anything. I don't know, by this point, I find that hard to believe. The truth is, whatever you imagine a Jack and Coke would taste like after a hard day of work, just imagine you're drinking some brown bubbly soda water that's expensive, because that's what it feels like when you're on GLP-1s. No wonder people don't want to pay $10 in change for the privilege of drinking it. By the same token, potato chips just don't beckon when you're on these drugs. They practically eliminate cravings for junk food and alcohol. If enough people take these drugs, then the chips die on the aisle and the price comes down. The GLP-1s, they are the accidental price cutters. Look, you're watching this show, which means you might have bought some NVIDIA or some AMD or some Broadcom, which indeed is trading down in after hours after a good quarter, but lighter than expected revenues and no boost to the full-year outlook. You might get a good chance to buy some Broadcom next week. Probably want to do it. Member of the club will tell you everything. Maybe one day the productivity gains we get from these microchips will make potato chips more affordable. Maybe the GPT derivatives can team up with the GLP-1s and create some wealth that can be saved. But right now, the bottom line is that the paths of the people who invest in the microchips or the enterprises that buy them are very different from the paths of people buying knockoff potato chips. And perhaps never the twain shall meet, at least unless something big changes. And I've got to tell you, my crystal ball, I can't see that far. I'm going to go to Isaac in Utah. Isaac.
Hi, Jim. So thanks for your time, first of all. I'm the founder of the Cramer Double Inverse fan account. That's on Facebook and Instagram. And my question for you is, do you think General Electric will continue to outperform its industry, yes or no?
Yes, I mean, I had a nice conversation with Larry Culp all the time, including today, and I think that you saw what happened when they had their analyst day. It's up another 7, 52-week high, an extraordinary performance by Larry. And yes, now in Canada, I have to say, I disclose, I worked for GE and I have GE stock, so I don't want people to say I'm going nuts for Larry Culp, but man, is he good, and that stock goes higher. I want to go to Rose in Pennsylvania. Rose.
Hey, Jim, from your old hometown, Philly.
Fantastic.
I have a question about Micron. I have a small position, and I was thinking about adding to it. It seems to sort of not go up as fast as some of the others, and I just wanted your expert wisdom and insight into if there's anything in the company that I might be missing.
Okay, I've studied Micron over the years, and I think that Sanjay Mehrotra would say that I am as good a student of Micron and not universe as anybody else he's ever met. And when you have these moves like Micron, they tend to last for about 18 months, and they go much further than they have already. I don't want you to buy it into the scrum that was up today, but I do think if you can get that stock in the mid-90s to high 80s, then I want you to pull the trigger immediately and buy some more. Let's go to Ted in Washington. Ted.
Hi, Jim. Booyah.
Booyah.
Just wondering, Jim, we've had Starbucks since day one back in the 80s. course, it's split many times. 2 or 3 years ago, when Howard Schultz left, it was 124. Today, it closed at $90.
Indeed.
What is your professional opinion, Jim?
Okay, Laxman Narasimhan is the CEO. He's been doing a very good job. He actually gave some talks in New York in the last couple of days. I've heard what he had to say. I think the big problem is twofold. One is that China is just really, really tough right now. I don't know when that's going to be able to wake up from its slumber. And two, there were some protests at his companies, at the company's stores that I think were ill-founded, but they happened, and that hurt domestic. So domestic, not great, and China, not great, and that's producing a $90 stock, which to me says buy it, because neither one of them is going to stay like that. That's what we're doing for the trust. Pick some up. Let's go to Robert in New York. Robert.
Hey, Jim, I got to tell you, you continue to steer us in the right direction. Today you saved me over $50,000 in the last 7 days, okay? And you did it, Viking. You said Viking is not the one that came out with this, that NVO, blah, 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 blah. I pulled the money off the table. You saved me. I made a ton of money on it.
Oh, thank you. I like when I see too much enthusiasm, I do want to pull back. Look, I told club members today, I wish Broadcom hadn't run up into the quarter. I don't like that endless enthusiasm. Viking had way too much enthusiasm. It was too hot. Had to take the profits. How can I help you now?
Exactly. We never messed up when we listened to you, and I hope you're around.
I make a lot. Look, I just try to make fewer mistakes than I do good ideas. But thank you for that. Thank you.
Keep doing it, Jimbo.
I will. I'm not going anywhere. Anyone think I'm going anywhere?
No.
I ain't going anywhere. I do the show Saturday, just nobody tapes it. What's up?
Well, okay. Anyway, the average price target for this stock that I'd like to talk about is $173. This is based upon 23 Wall Street analysts with 12-month price targets. The highest analyst is saying 263. The lowest is 75. So you got this company. I own it at $1.25. I'm not going to tell you. Don't say I'm a pig for not cashing in. But should we cash in our coins on Coinbase?
Okay, look, I think Coinbase is in a unique position. A lot of people are shorted. People didn't think that the SEC would find a way to actually just look the other way when it came to the ETFs. There's going to be an Ethereum ETF. I would not sell this until the day of the Ethereum ETF. When that ETF starts, I think you're going to get a good price, and that may be where you want to unload some. But no, this is momentum stock that's heavily shorted. I kind of, for people who are aggressive, it's a real good situation. All right, the paths of the people who invest in these microchips are on a very different path from those who are buying these or knockoff potato chips. And sadly, the two probably will never meet unless something big changes. And I sure wish it could, but I don't control that. Anybody tonight, the Fortune Brands, the company behind Moen and Masterlock, has its finger on the pulse of the U.S. home repair and remodel market. Let's hear what he has to say, because that market's been stalled by high rates. Then, from home fixtures to home building, I'm also learning more about faux wood deck from AZEK, on how the company's able to turn in and stop really pretty good top and bottom line beat, because decking is something that is still selling real well. Hey, by the way, stay tuned. Gap report after the bell, and with the new CEO at the helm, how's this company faring? Oh, man, you do not want to miss what I think is going to be a blockbuster story. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.